going on, ladies and gentlemen? Apparently, we got a new drinking game. Every time I say pumped, you take a drink. At least that's what Dan Bob's playing tonight. So we know at least one of us is going to have a good time. Ladies and gentlemen, thank you so much for joining me. My name is David Worrell. I am a swing trader primarily looking for that momentum. We want to follow that momentum, get in while the going's good, and get out when we lose that momentum. Momentum trader looking for trend and those base breakouts. Thank you guys so much for joining me. And if you're watching this at a later time, stick on through. There's little gems throughout all of it. And of course, if you want the watch list, just fast forward right towards the end. We go over a lot of what is going on in the overall market. Thank you guys so much for being with me. B. Stewie, put the link tree in the chat below. And of course, I have a question for each and every one of you. Have we bottomed? That's the real question, so make sure you vote on that poll. And we have so stinking much to go over. We have the CME Fed tool. We're going to keep up on the interest rates. We'll go over that quick. We have the investors sentiment survey. For quite some time, it has been down, but I have some good news for you as we will look at the Sector Spider ETF, and we will go over the beefiest of Stewie trades. Thank you guys so much for joining me. Let's get right into this. Boom, baby. You know, sometimes you put a little too much on your plate. I have been busy, but I did take Saturday to myself, woke up, had an amazing cup of coffee, and charted my little butt off. I wanted to make sure that we could bring you the best possible content, and we have it all. We have brought last week to fruition. Gold is still kicking ass if you played DRD or AU. If you played any of the internet like EVER or ROOT, you're up big, baby. So we keep looking at the leaders. I say leaders lead, and there's a reason why we don't marry stocks. And folks, we are still kicking ass. We're still taking names. Thank you so much for joining me. Dan Bob is in the building. You know I'm pumped. And B. Stewie is here. Jimmy Bright, what's going on? And Torqued Up. I had an awesome conversation with those two just before the show came on. I love the collaboration that we have. I love the community that we have. What's going on, Yosef? What's going on, Erica? Thank you guys so much for joining me. We have an amazing show for you. The first thing we want to do is Papa Powell. What is going on with those interest rates?
Interest rates with Jerome Powell.
Oh, yeah.
All righty, this is what we have going on. I'm zooming all the way forward to December, and you can see here 3 rate cuts. I know a lot of people are yabbering, and they are saying that we are only expected 2. I always go off the CME Fed tool, and to be quite honest, I think we're going to have 3. I think we're going to have 3, and especially if Papa Powell is talking about slowing down the quantitative tightening. Okay, he mentioned that in the last speech on the 19th, that he's going to be slowing it down. 3 cuts, that's still to be expected. The data will come in. It will change things as it goes. And speaking about the economic data, we always want to look at the economic calendar. I go to investing.com, and we can click on this week. We want to have the biggest things that are going on in America. And you can see right here, we have consumer confidence. A lot of people have been looking at the consumer confidence lately. We can just dive a little bit deeper into what that is if you'd like. That we are going to start doing a little bit more social sentiment on this channel. But this is a consumer confidence. It measures the level of consumer confidence in the economic activity. It is a leading indicator as it predicts consumer spending, which plays a major role in the overall economic activity. And you can see here, if we look at this over a 1-year period, you can see the overall consumer confidence has been slowly deteriorating. If we can lift back up off this base, that usually helps boost that economy. But you can see we are losing the confidence, and we don't want to see that. Of course, we know that sometimes bad news is good news, as initial jobless claims, if it comes out higher, that's going to put more pressure on old Papa Powell to lower those interest rates sooner. And if we start seeing, rather than a 3 Fed interest rate cuts at quarter of a rate cut at a time, what if we start to see 4? You're going to start to see some things boosting, and the second he brings up quantitative easing, you're going to see this market rip, tater, chip. Norman Conklin is in the building. Baby, you have made it here, and you have made it on time. So kudos to you, sir. Kudos to you. Now, back to the AI sentiment. This is one thing that Joseph likes to share in our Discord. And, I really do like looking at this too. It definitely shows the social sentiment from last month all the way through this month has been much higher on the bearish side. And as we all know, a lot of times when everybody is leaning to one side, it does just that opposite. And you can see it's been this way for a couple of months now. So with all of the tariffs, with all of the fear on jobs and the inflation, you guys can see here we're getting a lot of that bearish intake on that social sentiment. So you can take this how you want to. There's a few different understandings, but if you look at the historical average, you can see in the historical averages, we'd only be around 31% right now, and we're about double that. So that's pretty social sentiment is saying bearish, that we are going to head lower. The question is, are the sheep right? Are all the people right? Or is this thing going to bounce back? Well, I always like to stay positive, so I will show you the positive because there is plenty negative out there as we have been below a 200-day moving average, and that can be pretty scary. But we always want to take a look at the overall sector tracker. As the last day that we traded on Friday, you can see we had a pretty decent sell-off. Communication services did well, but I wanted to show you the year to date. This is what I found pretty damn interesting on this year to date. You can see here consumer discretionary has taken the biggest hit. I think a lot of that has to do with Tesla being a big part of that, selling off very hard, very fast. But you can see here energy. Energy so far on this year has been a flight to safety, even though it doesn't look like it in the overall ETF. Healthcare, as we talked about, folks, that huge bounce off that basing area in healthcare as we climbed higher, now 6.56% on the year. And then technology, another big hit to technology. So you can see risk off in that technology sector, and they're heading towards more of a flight to safety so far throughout this whole year. Where will the turnaround be? Where will the bounce be? Well, we look for the rally day, then we wait for the follow-through day. And I'm getting gray hairs, and I'm telling you, patience is tough. But if we follow the leaders and we stay focused on those leaders, we will have a hell of a lot better chance. So where do we find the leaders? Well, let's find the hottest surveys. Let's find the hottest sectors and follow the overall market. This is our ETF and SPY review.
This is your ETF and S&P 500 review.
All right, guys, so one thing I wanted to take a little peeky gander at, I made this up. I just wanted to show you guys on the daily time frame just something that might happen. Okay, now nobody really knows, nobody truly knows what's going to happen in the overall market, but if we do look at history, we can learn from that history. And one thing that I like to look at on the daily time frame is that oversold condition. So if we look before here, I marked out a lot of the oversold on the daily time frame where we get down to this $30 oversold. We'll just call it the $30 area, the 30 area. And once we get down here, you can see all the way back here, October 30th of 2023, we marked a bottom. If you guys remember, if you were a part of the chat, shout out to B. Stewie, I was calling this out as a possible bottom in the overall market as we created new higher lows here, that this could be a turning point as we could head higher. And sure enough, we have right here that oversold condition. After this huge bullish run, we get a pullback, breaking the 50-day moving average and creating another new low in the overall market, marking this oversold condition right here into this 30 area. Then we have another bull run as we pull back and we hit hard, right? You guys remember this here? We sold off very hard. When was this? Was this the Japanese carry trade, I believe? I gotta take a peek. I'm not 100% sure. So this comes down here, right here at that 30. Bada bing, bada boom. We start ripping right back up. Now, is this time different? That is up for you to decide. Now, I have dabbled a little bit in some stocks, but the stocks that I'm dabbling in are the flight to safety, the insurance, the golds, the Chinas. Now, I'm not playing gold or China, although I'm kind of kicking myself in the ass for not playing gold. We've been talking about gold. We've been for gold. We've been against gold. But regardless, gold is still a flight to safety, and you can see people love the gold. So will the S&P 500 bounce from here on these oversold conditions? That is the real question. We will have to just wait and see. Right now, we have this rally day. That is a really, really good sign. To have a rally day is a really good sign in this overall market. Now we can sit back, relax, and wait to see if we get that follow-through day. So when we look at this overall S&P 500, right here is your rally day. And another positive note that I want to point out is if we take the overall volume indicator from this area, this last notably large traded area that hit those oversold conditions, if we take the volume from there, you can see we're squatting down on top of it, making a new higher low right now. So those are my positive notes for the overall S&P 500. On the bad side, we're below a 200-day moving average. We're doing this wicking off top right here, which tells me that every time we get up into this 570 area, people are selling into it. So until we get above that area, I'm going to be holding my breath here, folks, because you don't want to be below this 560 area. You don't want to be below it. That's where more people are going to sell off into you. And if that happens, I am prepared to actually short the overall market. With that being said, though, let's take a look at the overall small cap stocks. The small cap had a beautiful debut as it bounced off of these lows, had a rally day, and then actually had a follow-through day here. It was the only ETF to have that follow-through day, and a lot of times they don't use the Russell 2000 to signify a risk-on scenario. But overall, it did have that follow-through day. Much well below a 200-day moving average, so not as exciting. NASDAQ, not so much to look at here as the S&P 500 mirrors pretty close to that. Dow Jones Industrial, same thing, bouncing off these lows. We need to see some volume come in for a follow-through day. Let's catch up on the chat, make sure we're all good. What's going on? Mama's in the building. What's going on, Jolene? It's good to see you. And B. Sui says, smash that like and sub button. If you guys haven't already, if I'm providing any form of entertainment or something a little educational, make sure you hit that like, hit that subscribe button. It helps out the channel a lot. And if you want to be a part of this community, click that link tree down below. Rob D, sup squad. What's going on, Rob? It's good to see you every morning. It's good to see you. We got 15 votes on the poll. The market has done what? Found a new bottom? 47% of you say that. The other 47% of you say no clue. Give me that watch list. The watch list is coming up very soon. But of course, you guys know we have to get through the sector review. We have to know what's going on in the overall sector so we can find the leaders and have a fresh start this beautiful Monday morning tomorrow. Next is XLK. It's going to look like the QQQs. XLY getting its ass kicked in consumer discretionary. Now, you're going to see, I'm going to be talking a lot about this cybersecurity because I do feel like cybersecurity is coming up. It is doing well. And I do feel like with AI, I really do feel like we're going to focus more on cybersecurity because if you have it easier for more people to be able to make scripts and create and influence different pieces of technology using AI, you make everyone a creator, you make everyone a hacker, and now you're going to have to stop the majority of the attacks with what? Cybersecurity that pairs itself with AI. It goes hand in hand. If AI is going to do well and it's already being implemented in every part of our life, why wouldn't cybersecurity be doing well? So we're going to keep an eye on this because We would like to see a new higher low in the cybersecurity, and if that happens, we have a few stocks in our back pocket we will go over very soon. We also have XRT, which this is retail. You can see well below these moving averages, not something we want to mess with. Now, communication services, above that 200, still below the 50, but actually holding this previous low. So that's a very good sign. It's definitely something we want to keep in our watch list. This was a previous runner. Remember, communications has led the overall market for quite some time. So former leaders might not take off again. It might not do well again, but we just want to note the strength here. IGV. IGV, this is your expanded tech software ETF. It's still below a 200-day moving average. It looks a lot like the S&P 500. XLP, consumer staples, below a 200, not caring for it. Regional banks, again, below a 200. Now, the financials are looking well. We're getting some wick off tops, but it is relatively strong compared to the overall S&P 500. Now, this is what I don't like. We see a lot of pharmaceuticals out there. We're seeing a lot of those therapeutics, biotechs, and I got a few for you. We're gonna go over a few. Some of them are too juicy not to talk about, but XBI is so far below this 200-day moving average. It's one of the worst ETFs out there, biotechs are. Okay? Not saying they can't explode because they're not able to go much lower, it looks like, but right now they look like shit. But just like healthcare, when we look at things like this, we have to look at it and understand it subjectively. So when I look at this, I ask myself, where might we bounce? So if we can find the damn tool here, just like healthcare the last time, if I mark out an area of support, we're going to take all of this traded area. You're going to find support here at this basing area. You're going to find support all in these areas above it and inside of it. And you can see this would be a new higher low in biotech. So just keep that in mind. We're seeing a lot of therapeutics. We're seeing a lot of healthcare. We're seeing a lot of biotech stocks, pharmaceutical stocks that are influencing this chart, and we might actually get this thing to turn around. I just got in the chat, Yosef brought up NEXT. We'll definitely be going over everyone's stock in the chat. So if you got something, let me know. We're going to be doing the watch list here very, very soon, baby. XLRE, so this is your real estate. So real estate's starting to make a turnaround. It was down and out for quite some time, but now we're getting relative strength compared to the overall market. We're just below that 200-day moving average. We just need a nice pop to get us going higher. Materials, much, much lower here. We do have a material stock on the watch list we're going to be going over very soon, but here's that healthcare. This is what I wanted to identify. New higher lows. If we're making these our lows, this was the previous area that we bounced off. We talked about this, and it looks like it's creating a head and shoulders pattern. The question is, if it holds this new higher low right here in this area, this might be a great area for it to break out and continue higher, getting above that 200-day moving average. It's important that we look at the equally weighted RSP below a 200-day moving average. Not a good sign for the overall market. Absolute doggy doo-doo down here. Be Stu, we put the link tree in the chat, baby. So make sure you click it, stick it, see you later, bye. Speaking of which, we have XLI below a 200-day moving average, but looking better than some. This is your industrial ETF. It's not looking too good, but we can carry on. MDY, this is your mid cap, your 400 ETF trust below a 200-day moving average. Mid caps aren't doing good. Small caps aren't doing good. Your SP 500 not doing so well. So what is going on with this this energy? Because I've been telling you guys, energy has been talked about, but energy has not been looking good. Okay? Now, if we look at energy and we really condense this information, let's just even go to a weekly. We could probably even go to a monthly. We're going to stick to this weekly, but I want you guys to look at this now. Now, we were looking at this last week and the week before. I think we've been watching this for 3 or 4 weeks now. We revisit this, okay? Now, what are we seeing on the weekly time frame? Okay? I've told you guys we've been trading sideways. Energy is not the area we want to be in yet. But look at this. This is why I'm always willing to wait and change my mind. These are new higher lows on the weekly time frame. We are seeing tightening range here. You guys notice that? See the stair-step pattern? These are the basing breakouts that we want to see. It, to me, personally, looks like energy is about to freaking explode. Absolutely explode, okay? So do not get this twisted, folks. When we have new higher lows being formed in the overall market, okay, and we know that we're seeing flight to safety stocks like gold, silver, and now we're starting to see some copper pop up. We have insurance, and we're seeing other areas start for flights to safety. And then we start to see energy, XLE, start to create new tightening ranges with higher lows and a base that's been what looks to be, May, June, July, August, September, October, November, December, January, February. Oh my gosh, almost a year, folks. Almost a year base. This is what we look for. And then look at this. Look at this. What's above this? New all-time highs? Folks, we have ourselves a big one on our hands here, okay? And you heard it here first. Constantly, I go back and I listen to old videos because I want to better myself. I want to be a better teacher and an instructor. I also want to learn from my mistakes too. And I go back and I watch some of these videos. We're going to look back on this, okay? We're going to look back on this. This is an area that it is going to move. Now, for the sake of the overall market and being flight to safeties, I hope it heads lower because that would usually have an inverse correlation with the overall market. Okay. But if we are to head lower, if we do start to keel over, I think XLE will be that flight to safety. And with these new higher lows and the tightening range on a yearly basing area, you grab onto your stocks. You grab onto your energy stocks. You hold on to them suckers because you're going to find some basing breakouts that move faster than that 4 to 6%. And you're going to make some freaking money off of those stocks, okay? And I want to know what stocks you're playing because if I find good risk reward to ratio, I want to be a part of those. I haven't came across too many good energy stocks, but it looks like Yosef has one for us today that does have a basing area that's next, N-E-X-T. So we will definitely bring that up and we will be talking about that very, very soon. I'll put that right up on the front of the watch list. So thank you for that. That's why I love this community. Now, XLU, we know XLU's been doing much better because as we rotate into easing off those interest rates, a lot of your big areas in utilities have big projects and they have less money that they're spending when those interest rates lower. We have a new higher low here on the daily time frame. You can see a tightening range, and this is a good sign. So XLU still looking very strong in this overall market. Nuclear, guys, I even drew it out here. This is what we want to see for a bullish continuation for nuclear, but it headed lower below a 200-day moving average now. And look at gold. We talked about gold many, many times before. You guys have been with me when I've been talking positive about gold. We've talked about this area all the way back here, folks. No joke. We talked about this area right here many, many times. The new higher lows being put in just kind of like XLE is doing. You have these new higher lows being put in a tightening range as it breaks higher. I'm just pointing out XLE doing the same damn thing. So take note, we can learn from previous leaders. And I don't say previous on gold because gold is still rip, tater chip to the north side, people. So keep an eye on gold. We talked to you about DRD and AU. And if you played those, you made money from last week. I promise you that. So keep an eye on gold as it's still following a 21-day moving average. And if we get another tightening range, gold's going to be an area where you want to see. RRC, Dan Bob says, for energy. If you guys have any other fast movers as well, we'll be going over those very, very soon. And you know, it's funny because I didn't do this before this, guys. I'm doing this right here in front of you now. I just did all of this, and now I have this overwhelming concentration. I want to know what's going on in energy. Okay, so if you have the energy stocks, let's be a great community and feed me that shit. I want to see it. I want to go through it. I want to dive deeper with you guys. So if you're into that stuff, if you want to nerd out with me tonight, find those energy stocks while I continue this show. And by the end of it, we will have a better consumption of where our energy money needs to go. So thank you for RRC. Thank you, Joseph, for NEXT. You guys are kicking ass and taking names. Next is KIE. So this is the insurance ETF. I drew this out, guys. This is hilarious because I drew this out somewhere right here. I don't remember where, but I said, we're just going to leave this on here, you know, because I'm playing in insurance. And look, it's actually, I drew this last week, guys, and it's doing exactly what I wrote here. This is best case scenario. And then, of course, if it heads higher here, you know, I'm rooting for it to head higher. So KIE, it's still looking very, very strong. This is a very, very strong market right now for the insurance ETF. And then, of course, the defense sector, because I have been finding some, well, one or two aerospace and defense technology sector stocks, single traded stocks that look really, really good. Yes, OKLO, yes. Is that an energy stock though, Rob D, or are you just talking OKLO looks good to you? Because I have that, that's one of my #1 watches right now, Rob. So yeah, good call on OKLO. But is that energy? Is that an energy stock? I'm not 100% sure about that. So that is our ETF and SPY review. I'm very happy we went over it because now we are starting to see that flight to safety is still strong. We're starting to see a tightening range on energy. And I think it's very, very important that we understand and we make that very pronounced that energy is looking very, very tasty here. Nuclear energy is OKLO. Okay, cool. Well, we'll definitely go over it. What's going on, Robert Tanch? It's good to see you, homie. Good to see ya. All right, CRK. All right, I'm going to throw that on the watch list as well, CRK, and we'll go over that as well. But before we do, I got to do a little something, folks. You know we got to go to the beefiest of stews.
Oh, I see you over there. You got problems? We've got the beef.
If you guys don't already know Beef Stew, the Bee Stewie in our Discord, he has been with me from day one. He's been learning from me, and then he went off onto a tangent, has been reading each and every single day, has been being a huge part of this community, trying to help others out, and it's amazing having chats with him on the side. We're really, really growing an awesome relationship. We've known each other for years and years and years, and it's just so cool to see somebody who went from not knowing anything to pumping out beautiful charting charts like this. Look at this absolutely beautiful charting. This is exactly what I want to see. When you click on a chart, you can see it right here. ECX Holdings. It shows right here your annual earnings. You can see the earnings on this, on the earnings board here, and it's showing you exactly what his thoughts are. You can see here we have a trending, ascending trend line getting into a tightening range here, and we can see the volume right here at the base with an anchored VWAP off of the earnings debut, and you can see it's stuck right below that tightening range. 12.28% ADR. That is a big ripper, so be very, very careful with that. So that is one of the many, many charts he's bringing up. And you can see here, here's OKTA, of course. I mean, everybody's talking about OKTA. It's going to give us the Aroba-dope. I love the pictures, man. OKTA stock market. Absolutely beautiful. So OKTA, you can see here, and I have the same exact thing charted. Let's see what B. Stewie put in here. So you can see he's pulling anchored VWAP from the earnings, and you can see we're just above that. We're in a very nice tightening range. I love the annual earnings here as we're starting a net profit margin, and you can see the overall earnings. We're starting to get into better and more positive territory quarter over quarter. So yes, I liked OKTA as well. You can see here he also pulled this, so you can see the point of control, which is the largest area of volume traded, also known as price action, where the price is, where the action is, the most action of where it's been traded. Bam, the point of control, baby. You can see the anchored VWAPs pulled here as well, just under that point of control, tightening range. Is this thing going to get ripping? I mean, I'm watching it. I'm very interested in it. This is technology services and packaged software. I'm not so sure that this is an energy play, but we'll definitely have to look more into that. Let's see here. NAGE. So yeah, we were just talking about this. So now this is the bioscience, guys. We were talking about biotechs and how they can be very, very frisky, if you will. But you cannot argue with this when you get an earnings pop up like this. And then, and I know Torqued Up likes these too, where you get a big pop up and then a tightening range after an earnings. He likes to see those continuations as much as I like to see those as well. I do try to stay away from the biotechs. Now, obviously, back in 2023 in around January, they were just going nuts. It was hard to not trade those. So I focused on the large cap and mega cap biotech type stocks in order to trade because I felt a little safer in those. Yeah, if you're into this, just know what you're playing because there's bigger risk when you're playing these biotech stocks, okay? But yeah, that's just a few on what he's got going on. We got PTGX as well that he's got on here. And then, of course, very informative. You guys just need to go here. You need to follow him. He has a lot of charting, a lot like my charting, and it's just a really good follow. So make sure you go follow your boy Beefy Stew. And of course, if I'm giving shout outs, we're going to give the only Swing Trader Strategies link tree a shout out. I'm going to go ahead and post this right now in the chat. If you guys want to be a part of this, my trading school is on here. This is the charting by Beef Stew right there. And then, of course, the ultimate AI stock analyzer. If you guys click on that, you can get it right here. Dan Bob put his hard-earned and research into this. Just go ahead and copy that baby right there, and you can paste that into ChatGPT or Grok, and it will pop out a summary that follows what we like to follow, and that is the overall market direction using CanSlim. We want to make sure they have good earnings, that they have money to spend, and we want to make sure it meets good criteria so that way we can weigh those risks. So make sure you check that out. And of course, we have our Discord server. You're more than welcome to join. Just make sure you're there to learn and make sure you're there to share as well. So we are Swing Trader Strategies on X. Go ahead and give that a little clicky poo. And yeah, guys, join the community. Join the damn community. And while you're here, right here's that like button. Don't be shy. Smash the like. And if I'm bringing you any education, if you think you're learning anything from this, just hit that like, hit that subscribe. What's going on? Endless possibilities. It's good to see you in the building. It is a great, great day. What is going on, folks? Are you guys ready? I think it's time. I think it is time. Let's go through the watch list. Now, I got plenty on here, but we're going to focus on the leaders first. This is the only thing that I will be focused on personally right now. Now, of course, you guys can change my mind because we have a few that you just brought up, which I think we'll go over first. We have CRK. Now, here's CRK. It moves 6.3%. Yeah, I have to give it to you. Is Comstock, is CRK the energy stock that we want to be a part of? Let's do a little bit of a deeper dive here on CRK. Comstock Resources. It looks like their EPS and sales growth, we're just starting to see something come in. This is an energy materials, oil and gas production. So that's you know, that's going to have, it's going to be interesting. When it comes to gas stocks right now, I'm not exactly sure where I stand on that, but yes, energy. We're going to keep CRK on our watch list for sure. I do like it because it's a bigger mover. We're seeing new higher lows here, and if this can sustain buying power, we might head higher. So yes, definitely CRK. What about RRC here? So RRC is looking looking very similar. RRC, let me just read this. RRC here. Energy, another energy, mineral, and gas production. This is looking a little bit better with the EPS and sales growth on first glance. We looked at this before. We talked about a tightening range before heading higher. You can see it kind of just slumped on over here. But now if it can create new higher lows before taking off, that'd be a really good sign here. Let's see. We also have NEXT. So NEXT, let me take a little peeky gander. Is this move 7.8%? I did have this on my watch list from a while back, and I have charted this before, as you guys can see. 95 RS rating. That's a really good sign. You can see it just had earnings, so that's out of the way. It had a trend break, not the kind of trend break I trade, because this created new lower lows before ripping up higher. So now this looks nice. Now it's interesting. But right here, I promise you guys, I never would have played this, because this trend break from here to here, I just don't like it. It's not showing any strength. But now if we zoom out, you can see it's above its point of control. If we zoom out and condense this, you can see it's almost and very, very close to that blue sky area. Okay, so that's what we like to see. So this is something that I really want to keep on the watch list, because if NEXT is going to be a quick mover at 7.8%, I want my money to work for me. So I'm going to go ahead and just create an alert when it gets close to these new all-time highs. And I want to be noted. I got to say, I like where it's at right now, but it's a little extended from that 10-day moving average. So I'm waiting for that base. So maybe we get a little tighter here. And if we do a best case scenario, folks, let me just give you a little best case scenario. Okay, instead of taking this when it's extended here, if we wanted to be patient and we wanted to be cool cats, right? We wait for something like this before it breaks out. Let the accumulation happen. Let it create another new higher low and get tight. And then we have proper risk management. Because right now, what are you going to risk off of? This low here? Well, I could definitely see it undercutting. I could definitely see this pulling back, bouncing off of its point of control and heading higher. So yes, I still think this needs more time, but I still think that this can do well. The Barry Waterman, what's going on? Good to see you, brother. WGRX, a long play or a short-term loving? That's probably a really good question. Let me get through these leaders here, guys, and then we'll definitely go over any other stocks that are in the chat. Oh, and you know what? OKLO. I think I was getting that mixed up with OKTA, actually. But anyway, guys, let me bring up OKTA since we are on the leader watch list. Okay, these are my top leaders. These are the stocks that I really, really like, the ones that I'm definitely going to be keeping an eye on. And if you don't have them on your watch list, I seriously suggest you putting them on your watch list, at least so you can say, hey, you know, Dave, I like your watch list. These stocks are moving higher. These are definitely ones to have on a watch list, okay? OKTA, this is technology services package software. You can see annually and quarterly they are having good net margin. If we scroll down here, you can see that it is engaging in the provisions of an identity management platform for the enterprises. This is what B. Stewie had as well, only I just wanted to give you a better visual as we zoom out. Look at this. What's above this? If we zoom all the way out here, you can see the previous traded area. So if we zoom in here, what are we seeing? We're seeing new higher lows forming here. We're above all moving averages, and look at the tightening range. Okay, this is going to show us tried and true. If it breaks the new all-time highs, this basing break here, or I shouldn't say new all-time highs, new all recent highs, on this new higher low in this tightening range, you have great risk reward. You can risk 110 here at a break of 116. I mean, that's beautiful. That's exactly what we want to see. If you guys remember last week, we talked about DRD. What did we talk about DRD? The breakout here. This was a beautiful, beautiful trend breakout on a yearly time frame. You can see here, look at this. Boom. Right on through, didn't look back, following that 10-day moving average. If you followed the advice from last week and 2 weeks ago, you're making money after this trend breakout was called out. we made a high of 22%. It's currently at 16%. That's good money, folks. That's good money. You do the math there. This is ORLA. When I see things like this, now this is the mining company, obviously precious metals, whether it's gold or silver, they're both up and they're projected to do really well. Their estimates show that they're doing really well. Best case scenario for this, you can see the 21-day moving average is what it likes to ride on. So because it's above that 21-day moving average and you wanted to play something like this, I could easily see this thing waiting for that 21 to catch up and get scooped right up underneath here before getting tight, creating either a trend or a basing breakout before heading higher. So I highly suggest keeping this ORLA on your watch list if you didn't have it already. And just keep an eye on it, folks, because if this starts to get that tightening range, and then it shows great risk reward, why not give this a shot? This might be a beautiful one for that precious metal play that you all have been watching. I know you guys have been watching gold, silver, and what I want to show you very soon, a copper name that I got from Plant-Based Trader on X. This is AGI. This is another gold. We talked about it. Now you can see it. You can see a beautiful cup with no handle, which we talked about a few weeks ago, how popular those were. And you can see a basing area that it broke out from too, holding this 21-day moving average, showing that it's true. We talked about TGTX. I jokingly said that this might be the next new VRNA, as VRNA has been a huge leader in this pharmaceutical space. And, it's just looking really, really good. And TGTX is kind of starting off that same race as it creates those new higher lows, exiting a stage 1. It looks like it's entering a stage 2 right off this area. And, this has room to continue higher. But right now it is extended and you would have to wait for a better setup. So whether it's another trend or a basing breakout, wait for that risk reward, wait for that time. Now we have SCCO. Now I know when you look at this, you're like, Dave, what the hell is this junk? And you know what? It was hilarious because B. Stewie gave me that exact saying. He goes, what are we looking at, Dave? This thing's below a 200-day moving average. Well, this is not a leader. I want to point that out right now. This is not a leader. It is a lagger. I believe copper could be the next piece to take off. We've seen gold. We've seen silver. What's going to happen? Well, copper's going to want to catch up. So this is a lagger play. Now, what I like about this is we are starting to see EPS and sales growth. Okay, this is a slower mover. If I remember right, let me just double check. SCCO. This moves 3.3%. But I think this will be a great indicator. And if you guys have a faster moving copper stock, I need you to send it my way. SCCO breaking above that psychological and technical base at 100. If this thing can start to get some legs, I think it will run. We also have IDCC. I don't know if you guys are keeping this on your watch list or not, but you can see it's getting really tight up here. We're getting some wonky EPS and sales growth. Definitely something to keep an eye on, but it is in that technology service and packaged software area. This thing has notably slighter than average volume of 407,000. So what do we look at when we see these things that have lower than average volume? And Torqued Up and I were talking about this as well. You're going to see these setups. As long as you're taking the play on higher than average volume or much, we want a tightening range on the price action. You don't want to get into a 50-cent or a dollar spread. Make sure that you're comfortable with what you're playing because, if you're playing big numbers here, you could get stuck in something like this. You could lose big money if the ask spread starts to get a little too wonky here. But if you start to see tightening range and you get a good price and you get a good stop loss with proper risk reward, then you might get yourself a good trade. So I'm keeping an eye on this, but I am noting to myself, this is on much lighter volume. So will the volume pick up? Will it be more interesting? Are we going to make new higher highs in this? It's on the watch list, and I'm just going to keep an eye on it. Now here's a China name. Now, we talked about this China name multiple times. 2 times I told you there's areas to get in. Of course, I ignore some of my own advice because I don't like playing China. I don't like playing biotechs. I like keeping my money in a safe place. So while I'm at work, working a 9 to 5, I can come in knowing that my money is an area where institutional ownership is buying some of this stuff up. LX is, well, I can't say whether they are or they're not, but it is in China, so it already holds inert risk. But LX, you can see a trending and a basing breakout. I almost just should keep this as one of my best technical setups so you guys can understand when I say trend and base breakouts. You can see right here a trend and a basing breakout, both absolutely beautiful, folks. And now LX, if you would have taken this basing breakout using the close of a 21-day moving average, you would be up over 202%. Goodness gracious, great balls of fire. Who would have thought China would be doing so damn good right now? But they are. Can't deny it. Y'all can't deny it. China is a riot. Here is another beautiful stock that has a beautiful cup with an earnings handle. It's basing out here, so pay close attention. This electronic technology, aerospace, and defense stock. Now, I have been looking at, like, what is it, HWM? Okay, I've been watching this for quite some time. It's just a very slow mover. I've been watching GE, another great aerospace and defense tech stock, but it's just a slower mover. So now I have finally stumbled upon this beautiful ATRO, which I do got to double check how fast. ATRO, let's take a little peeky gander. ATRO is a 4% mover, and so it's a little bit quicker. It's a little bit quicker than the GE or your HWM, where GE is 2.7%. and your HWM is 3.8%. If you're looking at the ATRO, that's going to be quicker. It's going to be that 4% mover, you know? Going to be that 4% mover, baby. So ATRO is on my watch list in aerospace and defense technology. We also have ALKS. I believe that, correct me if I'm wrong, I think one of you guys showed me this one. It was either Torqued Up or B Stewie. I keep, every time I say torqued up, I'm thinking twerked up. My bad. Oh, Dan Bob, you poor guy. You poor guy. I know. Everyone thinks that every president's a jerk. ALKS is looking good. Beautiful. New higher highs, and then we are getting a nice tightening top here. So a bullish candle trying to break these highs here as it squats back down. So this is what I like about ALKS. Now keep in mind that this is your pharmaceuticals, your health and technology. But if you have this basing area right here, we break above that basing area right here, and then we create this beautiful flag with a new higher low. The RS rating's at 88, so it could be a little bit higher, but I could see this thing ripping off of this area. So keep in mind, you know, I don't like the biotech area, but this is in the pharmaceuticals. We're starting to see some EPS and sales growth, but you know, it just got the inert risk this healthcare technology pharmaceuticals. So just be careful with it. But we got ALKS on the watch list. Here's another energy. Bloomberg Energy, BE, is looking pretty good. If I remember, it's a little bit slower though. No, 8.4%. So this one came up on my watch list. I think B. Stewie and I were actually talking about this. But Bloomberg Energy is doing really good. I think what it was is I was trying to find BA, Boeing, and I typed in BE and I go, oh, I really like this. You know, I really like this. And what I like about this is this is what has that look. So see how it's basing now? It's been basing for a year. So since last November, okay, it's been basing. And you can see that this is exactly what XLE, this is exactly what I'm looking for. So here's XLE over this humongous time frame, guys. Look at this sideways action, new higher lows, and now it's starting to get tight. If this thing can get a little tighter and then break out and head much higher, look where BE, look what BE's doing. BE could do that same damn thing, okay? If we zoom out here, you can see if BE breaks out of this area this thing could really get to ripping. I mean, this is a long-term area of resistance right here, folks. Look at that. You can see that multiple areas from years ago. 2021, 1, 2, 3, 4 different times it hit the same area. And now look, you're creating new higher lows in a tightening range right above where area and support are coming together. Something has to make a decision here, folks. It's either going to go higher or it's going to go lower. It's not going to trade sideways for the rest of its eternity. It's going to have to make a decision. All right. So I like Bloomberg Energy. I like the fact that it is a fast mover, and now it is moving up to one of my main watches up there with OKTA. Let's see what else we got. So WGS is a good one. I know that we were talking about this in the chat. We were talking about that $100 resistance area. We broke up through it with great EPS and sales growth. I think WGS needs to be talked about a little bit more. We have this trend break. Yes, you could have played that trend break. I don't think that, this was, I guess the hottest sector, hottest stock. This is the healthcare services. It's been doing much better lately, but it wasn't like completely on my radar as WGS being a health service stock that's doing the best. Now, I actually thought WGS was in the packaged software, as it could be. If we read more into this, they might sell a service as a packaged software, but they are doing very, very well. And now I'm waiting for a basing breakout. If it can hold here and start to get tight again under that 104 area, I think it could do really, really well. As it operates as a health intelligent company, it engages in healthcare with the use of its collective disease data. It offers exome and genome testing for diagnosis of genetic disease. The company was founded by Eric Schradt in October 2015, and this headquarters in Stamford, Connecticut. I think CT is Connecticut, right? I don't know. Correct me if I'm wrong. Anyway, that's going to move up on the list, guys. I mean, it's showing very, very strength. It's very, very strong in this overall market as it's held most of all of this volatility. VSEC, I've been telling you guys about VSEC for quite some time. This is in the industrial services, and you can just see here it's getting really, really tight as we have this beautiful cup. Not beautiful, but we do have a cup with a handle, and if it breaks out of this top here, I think it can get going. We also have MP. I don't care for the stock when it comes to the financials at all, but you can see it's got new higher lows in a tightening range here, and it's in that non-energy material. It's in other materials. We're keeping an eye on it, but I don't know. It's not my favorite. New higher lows. ALHC, it's definitely getting some ripping here. This is also in the health services, so we're starting to see a lot of those health services. It's starting to take off, managed healthcare systems. You can see it's got good EPS and sales growth with these new higher lows and the high RS rating. This newer IPO might end up just start getting some legs here. I think this needs to move up on the watch list as it is doing very, very well. Let's see, PGR. So this is Progressive. This is going to be a leader in your insurance name, as well as Bro, as well as Root, as well as EVER. We'll go over a couple more of those. We also have Philip Morris, which is PM. This is going to be your consumer non-durable tobacco, or as Dan Bob likes to say, your sinner stocks. A lot of times your alcohol and tobacco does good when you're flight to safety because you see a lot more sales in those. We also have SSRM. Shout out to B. Stewie. He was talking about this one. I told you guys I never really cared for it because of this big sell-off, but new higher lows, and you can see it's in the right area as precious metals has been rip tater chipping. PBI, tightening range, anchored VWAP. We got a pinch here. It's actually below that low, so maybe not so much a pinch as it needs to get above that area. Not my favorite, but Pitney Bowes, I just put it on here because it was in that same sector. We're going to get rid of that one. Bros, same thing, guys, here. This is the insurance. This is a leader in insurance. It's a slower mover. That's why we keep an eye on Root and Ever. NUTX, again, healthcare services. If we go back and look at XLV, which is the healthcare technology, you can see it's just been trading sideways just below that 200-day moving average, but it bounced off of this original area. So will this head and shoulders pattern clear up with new higher highs, or are we going to head lower? But we're seeing a lot of those stocks. Now, former leaders usually do not continue to lead, but PLTR seems to be going continually against this trend. So I cannot argue with this price action as it creates new higher lows. This is a very good sign for PLTR as it has sustainable EPS and sales growth. I know we have a few of you guys in it, and I am rooting for you as it is above all of its moving averages and has held strong above that 200-day moving average as well. So it's now above all those moving averages, and big shout out to those holders in PLTR. I hope it continues to rip for you as it has now bounced off this area of support. So as long as it can hold this new higher low here, I think PLTR's got a hell of a chance to continue heading higher. If you guys remember, we talked about COMP. I like the numbers on the EPS and sales growth. We did have a trend break in this in Compass, the packaged software. Once again, guys, packaged software, the name of the game is being in those leaders, in those things that are in a good sector. Compass engages in the provisions of online real estate platform. Its platform provides an integrated suite of software for company relationship management, marketing, client services, and operators with other critical functionalities. So to be quite honest, I don't know exactly what they do, but what I do like is that they are leading. We have a trend breakout. If you don't like this, you don't understand trend breakouts, folks. This thing is absolutely perfect. You can see we have a big push up here on volume. As it pulls back, it follows the same moving averages that it did before, the 10 and 21-day moving average. After it holds that 21-day moving average, we have new higher lows being formed here as we have this ascending trend line. And you can see right here on this day, on the 17th, it broke out and it also broke this mini base. So I got in and I held using the 21-day moving average as my guide for a stop loss. And as it curled up, boom, now we're starting to move here, folks. And that is what I like to see in a trade. So this is a beautiful trend breakout. Now, the question is, will I be able to take half off? The half off area is going to be these new all-time highs. So we're going to see, is it going to be able to get there? Because half off will be at 11%. Then I move my stop up to break even or use my guide as that 21 continues to head higher. We also have EVER looking absolutely beautiful here as it is following Root. The whole reason why I like Root better than EVER, because EVER is just getting people to come together as Root is actually selling their insurance plan. So I liked Root better, and you guys seen, I've already posted and talked quite a bit about this. We took 1/3 off at 14.5%. We're making money. This is the basing breakouts in the movers that are also showing EPS and sales growth. So it marks all my criteria except for one, and that was the market direction. The market isn't looking very good, but because I am in a flight to safety risk off type area, it is heading higher. So we'll see if it wants to continue to pay me or not. Either way, I cannot lose money on this stock. I've exited out of that area, and the 10-day moving average is above my previous my area that I bought in. So this is a win-win situation for me, unless we get a huge gap down that happens like that happens like we get like some DeepSeek information. DeepSeek now makes it 30% cheaper across the board for insurance companies. You're going to see Root tank like a Mickey Ficky. So we'll keep an eye on that. Let's catch up on chat. Dan Bob says Sin Stocks is in a real term percent cannabis, nicotine, alcohol, casinos, and etc. You know, I didn't realize how well Sin Stocks were doing. Maybe we should take a peeky gander at some of those. SE, this is Internet Retail Trade. I just wanted to point this out because I didn't want to take this off my watch list just yet. I wanted to give it one more chance. But I got to say, it's starting to look like it's keeling over as it is getting tighter here. You can see it's clearly getting tighter, but I don't know. I don't know. Will it hold that 50-day moving average? If it doesn't, I could see this thing really slumping on over and breaking this area. So we'll see. It does have EPS and sales growth though, so it's looking good. We already went over GE and HWN. My last and final, but not least, another health technology AXGN, new higher lows, a tightening range, and we have a basing area at that 19. It also has good EPS and sales growth at first glance here. So we're going to see what's going to happen. The only other thing, again, is light volume. So make sure when you're looking at some of these stocks, you want to be in higher volume traded stocks. So make sure if you're in these, you see big burst of volume come in to help support and back up the fact that there is volume coming in for these. And you want to be in those areas with higher than average volume. Good night, mama. I hope you have a good night. And ladies and gentlemen, now is the time. If you got a stock you want to rock, throw them in the chat box because we want to go over everything that you may have as AROC, Arch Rock. Thank you so much for posting that in the chat. Let me take a little peeky gander here. Who put that? Who put that in the chat? Yosef, my man Yosef. This looks absolutely beautiful. The question is, what is the ADR on AROC? Because it might be too good to be true. No, 4.2%. That is a good sign. So let's just take another little peeky gander. AROC, as it bounced off its 200-day moving average. I like the EPS and sales growth. I do like that. That looks really, really nice. We're going to see if this wants to continue to hold those new higher lows as it's already bounced now at this basing area. The question is, can it get back up and over this area? If it can get back up and over that area, that might be a good area for a risk reward, as it might show it pull back here, create a new higher low before it breaks out. So it might show tightening range before getting back above this area. I could see this thing really intriguing me right here, but I obviously wouldn't have taken that because it didn't break out. Showing support right here and breaking out, but no, it broke down. So waiting to see what is going to happen with our AROC. Good night, mama. Good night, mama. So I think that's everything, guys. I think we've covered a little bit of everything. The sin stocks is one thing that we need to dive a little bit deeper into. The only sin stock, I got the one sin stock that I got on here. We went over the tobacco product one. What was that? PM, I believe. Yeah, PM was the tobacco product, the Philip Morris International. And you can see that's doing well. UNM torqued up, says lower average daily range, but huge volume on Friday. You know, I seen a lot of stocks get a lot of volume coming in on Friday. So we're starting to see some change up here. I love the new higher lows. This is what I like to see, as we have a basing area right here at this top. So thanks for pointing that out for me. This is phenomenal, though. This is exactly what I want to see. Here's your cup with handle. And another thing I like about these cup with handles is the new higher lows. You can see you got 1, 2, after the cup, you get 3, and then 4. And as it gets tighter and tighter, it makes this basing area. Then it breaks out, and look, it's retested this area. So now you're getting a base on top of a base. And so that's a really good sign too. If it starts to rip again, you might see more price movement. And look down here, guys, UNM Group. It did the same exact thing. You have this beautiful basing area that's creating, and you can see down here, it's almost drawing them out for you too. Here is your low, your new lower high, your new lower high right here, and then boom, your fourth new higher low. I said new lower high. New higher low right here as it gets into a tightening basing range and heads higher. So is it going to do it again? You know, it might start to base out and head higher again because it already did it again, but we will see very soon. So I like UNM, but you did say it was slower. Let's see how slow UNM is as it moves 2.8%. Yeah, too good to be true, man. It looks so good. I want in this thing. But yeah, no, guys, just understand what you're playing. It's not bad to play slower moving stocks. If you're into it, you know, just know that you got to put more capital into these stocks, and you got to wait. You got to be more patient. You know, you're not gonna become a millionaire from playing these stocks, but you can still make some money. We got GRRR. Don't growl at me, GRRR. So what I don't like about this is it undercut this area. It did rally back up after it undercut this area, but I still think it needs some more time. So let me bring up GRRR. So here's my issue with this. See this? This looks like a blow-off volume top to me. Okay, so for GRRR to make more sense, I would want to see this get into a tightening range. So you can see this, it's following the 50-day moving average. So best case scenario for me would be it does this and gets tight before breaking out higher. So definitely keep it on your watch list because this could happen as it has an RS rating of 99, okay? And the Gorilla Technology Group, it's definitely retail favorite right now. A lot of people are talking about it, but we're starting to get some chop here, some chop action. Wait for that tightening range because after expansion comes contraction, and then you have proper risk reward. So I do like GRRRRR, endless possibilities. Let's keep that on our watch list and see what happens. And Rob, yes, we were talking about HIMS earlier. You know, the thing with HIMS is it's squatting right down on this area right here. See this area? Right before this thing launched up higher. This area right here. Oh, what did I do? What did I just do? Oh gosh, I broke it. I was trying to delete this. Oh goodness. I have so much to learn, guys. So much to learn. But anyway, guys, this HIM breakout that happened right here in this area, it's retesting that breakout area. That's all it's doing. You can see it. Here, I'll draw a line to make it more simple. It just undercut that area. So if it forms a base, creates new higher lows, it might take off here. The only thing I'd be worried about is the bag holders that are willing to sell off into you. So do keep that in mind. HIMS and HERS, it's doing very good. It's very popular. The EPS and sales growth is absolutely exceptional. The question is, has the market already priced all of that into its future growth? That's the question. You know, does it have another leg higher, or is this it? Is this the blow off volume, and is it going to enter a stage 4 here? That's the question. I still think we have a lot of time to see, so we're going to keep an eye on HIMS. What's up, NASCAR? It's good to see you, man. I'm proud to see you back in here, popping in every once in a while, saying hello. What else we got for stocks? So HIMS losing their money market weight loss during drug. Yeah, and Dan Bob, you have pointed that out too, and you can actually see it in the stock because of that big pullback there. And I did post something in our Discord. Let me see if I can bring it up really quick. Let me just take a little peeky gander. It's just an excerpt from William O'Neill's book, and you guys know I love studying that book. And it says, it should be in here, After a big volume sell-off, you don't want to be, so risk on in some of these stocks, is basically what it had said. Yeah, I can't read it, so we don't want to, it won't be verbatim here, but that's the overall caption on that, guys. And so just be careful with HIMS because they lost their drug. They lost their main selling drug there. You don't want to be a part of something that, if they're losing their main sales, of course, you're going to see their sales and their EPS growth go way down. It's going to plummet. So just keep an eye on the price action because it might just be a fluke and then they get FDA approval to continue selling it. I don't know, but we'll see it in the price action. So keep an eye on that. NASCAR says the big small cap movers happened after the bell all last week. Hardly anything moving pre-market. Yeah, man, the small cap movers have been a little bit boring. CHNR, right price, has a history of parabolic movers, 50 to 70 cent stock, hot and end last week. Okay, and then threw out some tickers out there. So guys, I don't care to watch these. I really like the momentum leaders. These are below the 200-day moving average, so not for me. Definitely not for me. This would be on my list to short. As you can see, it's one of those gap and craps where they always gap up and crap, and you can see over the past 3 years, it's been doing exactly that. So every pop that we get on this, it sells off. It's a low RS rating, so not my kind of ticker. And I have a feeling, you're probably giving me a bunch of tickers that are like that. NASCAR, yeah, below a 200-day moving average, not my favorite. IBO, let's take a look. So IBO, this is a small cap mover, the biotech, huge push up here. If I'm looking at something like this on the daily time frame, I'm sure it's probably got some type of catalyst. If it doesn't, I wouldn't look at this at all. But on a small cap mover, best case scenario, we do something like this and we get tight, creating a trend or possibly a basing breakout. So we can actually have proper risk reward on something like this. But a move that goes straight up like this, I gotta wait. What's going on with it? The best thing I can do is look at the hourly time frame to see if we're seeing any kind of setups, and I'm still not seeing any kind of trend or base just yet. So Yeah, definitely small cap movers make or break kind of your account. SGLY, another one that you put in here, straight up, another straight up kind of mover. And this is on the hourly time frame. So you can't find proper risk reward in stocks that are going straight up or straight down. I need to find something to risk off of. If you're using an indicator like an overbought or an oversold, that's a little risky too, especially using it on small cap stocks. But regardless, if this is the way you play, if this is the small cap stocks that you like to keep an eye on, definitely these are definitely some fast movers, but not my kind of plays, not the stocks I like to really trade with or tell people about, honestly. So NASCAR, it's good to see you in here. Those are looking like some Quilamuggy parabolic shorts. Yeah, absolutely. That's the first thing I think of too when I see stocks, like IBO. You're looking for that parabolic top, and a lot of times when I would trade these, I would always look to the left and I would try to find something that had an area of resistance so that we would find a blow off top, we'd take a short and we would hold. I used to do quite a bit of that, but it's just not my forte. I like to set it and forget it, kind of come back and reap the rewards rather than staring at each tick. I have enough gray hairs, but shout out to you. Shout out to you being able to do that. What's up, Jonathan Lindy? Good to see you. SUNE, let's take a peeky gander. So SUNE, this is an energy stock. Now, I want to tell everybody, I'm going to look at this in a positive light, but first and foremost, you got to understand where this stock is coming from. It is seriously, this is a penny stock. It's a garbage stock. They don't have EPS or sales growth, and I'm sure if we ran this through the ringers, you would start to see that this isn't probably a good long-term. But if you're looking for volatile movement, you can see SUNE is in the energy sector. This is the hourly time frame. If we look at the daily, wow, even worse. Yeah, we can't look at something like this. This is an RS rating of 1%. We're gonna shut it down. We're gonna shut it down on that one, bro. I'm sorry, Jonathan. I want you to look at more volatile stocks. If you want to look at energy, look at like a BE right now. This is a good energy stock that I have identified that actually has some EPS and sales growth. We have new higher lows, and I really think we have proper risk reward on this one. So I would definitely look at that, John, rather than SUNE. Rob, let's see, good day trading stocks for sure. Yeah, definitely good day trading stocks on IBO. Rob says KR, let's take a peeky gander. So Kroger company, yeah, so Kroger, lick your fingers, guys. We're going grocery shopping. Here we go. Kroger is doing very, very well now. I know Kroger for sure is a slower mover. KR, you can see this, 2.6%, so much slower mover on KR, but you are looking at the right stocks here. These are usually flight to safeties when you have to buy grocery or retail trade or food retail. You're going to see these do good because they're usually a flight to safety, as Kroger created a nice cup with handle, now making new higher lows. Using this 50-day moving average, this looks like a great area for a risk, so keep that in mind. Yeah, Kroger looking good. Kroger looking really good. Their EPS and sales growth also looking pretty well right now. Jonathan, you're absolutely welcome, brother. Welcome to the squad. I hope that we have earned your support, my good friend. NASCAR says, any connections to be made between RGC and DGNX? Both Hong Kong, but different underwriters. Yeah, so instead of answering your question, I would dodge this, you know what I mean? And I would say, what's the price action telling us? And yeah, they're both kind of moving straight up. One might follow the other for sure. There might be some correlation, but wow, those are definitely some rip your face off, big movers there. I did see RGC, that's some crazy stuff here, guys. When you see something move off these bases and we pull, let me get this back on here. At one point, this thing moved 1,308%. This is a put your mama in a casket. You just lost the whole house because, you shorted a few shares. You thought you were a big boy shorting a few shares, and now you're shit in the bed and you own a ton of money. You know what I mean? All right, we got time for one more. This is the last one. NBIS, Nebius Group. This is below a 200-day moving average. If we zoom out on this, guys, if we zoom out, you can see we're on a huge downtrend. Just recently, though, it started creating new higher lows, but still, the RS rating, this thing is not leading in any group. It's not doing very well, guys, so just be careful with NBIS. I don't like this. It's not a momentum leader. It's below a declining 200-day moving average. And, of course, you got to be very careful because earnings is coming out April 23rd. So just keep that in mind as well. So that is the last but not least. Just keep in mind, guys, I absolutely will be keeping a close eye on energy, WGS, BE, OKTA, the gold stocks, your insurance stocks. Those are our main watch. And guys, I love the fact that we found XLE on here together. You seen it. And then we all kind of got together and gave our opinions on some energy stocks. So keep that in mind, guys. I hope you have an awesome night. And if you don't know already, stay till the very end. I'll give you your shout out as you deserve. Thank you guys so much for sticking with me and being a huge part of the show. We'll see you guys on Wednesday. Peace, baby. All right, guys, be Stewie. Thank you so much for moderating tonight. Yosef, thank you so much for being here and always bringing some of the best stocks. NEXT was awesome. Endless possibilities. And Zamora. Thank you guys so much. Rob D, I appreciate that, brother. I love to give my time over, and I love that you guys like to learn. Jolene, I'm so happy you were here. You made it on time, Goober. Torqued Up, you are very welcome. Thank you so much for being here and all the improved conversations. I love the conversations that we have in our Discord. I love being able to work and throwing an earbud in and hearing you guys chat about not just tickers, but finances and bettering your life, bettering your children's life. Let's keep up the kick-ass work. NASCAR all out. Thank you guys so much for being here. I see you guys throwing all that love in the chat. I'm overwhelmed with the fact that I'm surrounded with such awesome people. Thank you, Mama. I know you're probably already sleeping, but if I'm in your sweet, sweet ear, I hope you have the best of the best dreams. The Barry Waterman stopped by to say hi. Thank you so much for being here. You know I appreciate you. And we had Tainch, the old Roberto Tainch had showed up and blessed us with his presence. And Erica K, last but not least, Erica K, I hope you have an awesome, awesome night. Thank you so much, Dan, Bob, and everyone that is putting forth so much effort. I hope you guys have an awesome start to your weekend. We'll see you guys in the Discord tomorrow. Peace, guys. Love ya. Love you. Bye.